Hello, everybody. Hope you're doing well. Thanks for coming today. Jeff Gibby, I'm going to kick us off. Hope everybody's having a good holiday season, et cetera, et cetera, et cetera. Let's go ahead and kind of read your favorite part. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. And it is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and MetaStock shall have no liability for any investment decisions based on the use of the strategy software, any trading strategies, or any information provided in connection with the company. So there you go. I want to welcome you guys all out today. I want to thank you for coming. I hope you're doing well. We have a great speaker. I really do like kind of the thought that Ryan has put into the methodologies that he uses in his own trading. And he always has a lot of really good things to say. So we're going to go ahead and kind of get straight to the point today. Ryan, how are you doing?
I'm doing great.
My reading of the legal disclaimer made you a little bit giggly.
Doesn't it always?
I try and do it different a little bit every time.
Yeah, you got to keep everybody on their toes. I get you.
Yeah, well, or keep it a little bit more interesting for me at least, right? So I just sent you the screen controls, but I'm not seeing your screen just yet. I'll let you know when I can see it. Anyway, all right, let me ask you some really important questions to trading. I do see your screen. Are you ready for the holidays yet?
I am, yeah. We're actually we're going to so I live in Chicago. My wife and we're going to see her parents who live up in the mountains of Georgia. So though there's no snow here, there's a good chance there'll be some snow up there for Christmas, which is always nice.
Oh, that'll be great. Okay. Well, everything looks like it's good on this end. I'm gonna get quiet and let you run the court.
All right, perfect. You can see my screen okay?
Yes, correct. Yeah, it's coming through.
Perfect. All right, we'll jump right into it. Well, like Jeff said, my name's Ryan Capaccio, and I'm co-founder of Simplicity Trading Systems, as well as managing partner of the Capaccio Trading Company. A little bit before we begin my kind of history, as well as these two companies. Capaccio Trading is an equity trading firm where we trade stocks, ETFs, and REITs. We primarily do short to long-term trading with very little day trading, which means we're full-time traders. This is how we make our living. In fact, usually our lives actually revolve around the markets, which can be sometimes good and sometimes bad. In the beginning, we got all of our trade ideas from doing traditional technical analysis. But like most people, it was taking me literally hours to do research on just a single stock, where eventually it got to the point where there was just not enough hours in the day to analyze all the different stocks and securities that I wanted to look at. And I thought, well, wouldn't it be great if there was a system out there that did most of the work for me? Just a simple system that could tell me if a stock was going to trend up or trend down. Then tell me when the right time to place either a long-term trade was or a short-term trade. So I didn't have to every night do all this work manually. But unfortunately, there was none. So I co-founded Simplicity to develop a system that could do this. And after years of hard work, what ended up happening was we had developed a strategy that took almost no time at all to analyze securities. I went from doing hours of research a day to literally only minutes. Then people started to hear about what we had created, so we started consulting with high net worth individuals on their trading. We did this for a while before it occurred to me, why were we only sharing this with high net worth people? Why don't we make this strategy into a program and then make it available to everyone? So we contacted MetaStock, and together we developed the Endeavour program, or add-on, which is what I'm here to talk about today. So we'll dive right in. Like I said, we built Endeavour to do the hard work for you, including most of the technical analysis, which generally is the hardest part. With Endeavour, you can simply and effortlessly identify the best stocks to trade. And today, I'm going to show you how Endeavour can help you stay profitable, even with the markets moving up one day and down the next. Now, it's no big surprise that the markets are all topsy-turvy right now. And I believe now it's more important than ever to have a system that you can trust to help you predict how stocks are going to move. So let's go over the game plan for today. My goal is to show you how Endeavour can help you do 3 important tasks. And hopefully, at the end, you'll walk away with a strategy that can help improve your trading. Task number 1, how to predict the beginning of a substantial upward or downward trend. Task number 2, how to predict when price is about to make a 20% move up, even with the markets falling. Task number 3, how to predict if price is overbought, up at a high, and about to fall 5% or more. When you look at these 3 topics, the common theme or thread, I guess you could say, between them is the idea of timing. So Endeavour is going to show us the right time to place a trade. Let's start by taking a look at how most people come up with their idea for a trade. I'm going to use a few examples of how people usually go about picking stocks. And this works for either the market rising or falling. People turn to stocks they know, right? Fairly simple idea. So here's Bed Bath & Beyond, ticker symbol BBBY, a company that almost everyone has shopped at. So most people know then it doesn't matter if you go in one of their showrooms right when the doors open or right before they close, they're always packed with people. So it's only natural for you to think, hey, maybe I should trade this stock. So first thing you do is you check your chart and you see, hey, price used to be trading at $80, but now it's only at 45. And you think, well, that's a great value. But it's only a great value if price rises and goes back up to 80. So I propose the question, is price done falling? Well, technically right now, you'd have to guess because it's only been moving down. So I'll move forward in time here and we can see the price didn't rise. In fact, it fell. Now it's at $30. And here is where all the talking heads on CNBC and Bloomberg start chiming in, saying that this is it. Price has found its bottom. It is done falling. And again, you're left with the question, so are they right? Is this the bottom? Well, once again, you'd have to guess. When I move forward again, we can see the price has fallen again. Now it's at $14. So we tried using our gut instinct, right? What we saw in the store. We tried listening to the talking heads, the people on TV. What about social media? Well, here's a guy that on September 27th, which is the date on the chart, had said that he started a new position. So he thinks the price is still going to rise. And should we follow his lead? Well, we could, but it's kind of a guess. And that hasn't really turned out well for us so far. Or our Endeavour program could just show you. When you bring a stock up, our system is going to automatically put a ribbon on the bottom of your chart that's going to show you if price is going to have a downward trend or an upward trend. So there is no more guessing. We also show you the 100 period simple moving average to help you see the direction of the trend. We think of this as categorizing. Are stocks going to trend up or are they going to trend down? So when the ribbon on the bottom of the screen is light gray, that means to stay away. Real simple way to remember it. And we call this category discovery. You can see the ribbon on the bottom is light gray, began to be light gray in May of 2015, right over here, when price was still up around $75. So for over 3 years, our system said that price is more likely to trend down than to trend up. And that's exactly what it did. It trended down. In fact, like I said, this chart here is from September 27th. So let's move forward in time again. Now, this is yesterday's chart, December 12th. And you can see the price is now at $12.34 with no signs of rising anytime soon, which means our friend on social media that bought when price was at $14.80 is now down over 16%. So please, if anyone's out there thinking, hey, we're going to get that Christmas rally, I'm going to put my money in Bed Bath & Beyond, ticker symbol BBB, please stay away. There are plenty of better stocks out there. In fact, I'm going to show you some in just a little bit. Next is a stock that I know everyone's heard of, GE. Now, I wasn't actually going to use this as my example because everyone already knows that this stock is falling. But I get emailed about this stock almost every single week with people telling me that they have done hours and days of research on General Electric and they think that it's time for price to finally rise. And then they ask me what I think. So it occurred to me that this is actually the perfect example because I don't have to do hours of research on GE to find out if price is going to continue to fall or to finally start to rise. All I have to do is apply our Endeavour and Discovery template and see which category price is in. So when we apply the template here, we can see that price has been in Discovery since January of 2017. And just like the ribbon says, price has been in a downward trend the entire time. Now, the price that you see on this chart, $12.38, is actually from the end of September. So let's move forward in time again, and we can see that price, well, technically this is yesterday's price. So price from December 12th, $6.71. I can't even tell you how many people emailed me back in September when price was in the $12 range, saying that they were going long and they knew the price was going to rise. These people were just guessing the price was going to finally start to rise. And since then, they have lost half of their money. The Discovery category will keep you from buying into stocks that are not likely to rise anytime soon by telling you that they're in a downward trend. Now, stocks are cyclical, which means that just because a stock is in Discovery now doesn't mean that it's going to stay there forever. So how do you tell when a price is ready to move up and begin an upward trend? Well, just like we have a category that tells you when price is going to move down, we have one that's going to tell you when price is going to move up. And we call it Endeavour. When a stock's price moves into the Endeavour category, you'll see its largest run up in price. And this is where we want you to buy in, when price is going to make an upward trend. So, okay, what is Endeavour? Well, when the ribbon on the bottom of the screen turns to dark gray, it represents the Endeavour category, and it identifies when a stock's price has the potential to make an upward trend. Now, the key word there being potential. See, not all stocks even have the ability to trend, but that's okay because I'm going to show you how to tell which ones can and cannot trend up. Now, generally, we look for a stock to pass a two-part test. Part number one, does the stock move well when in either the Endeavour or Discovery category? And by well, I mean, does price fall or rise smoothly? Because if you move well in one category, you're very likely to move well in the other. Part two, does price stay below the 100 period simple moving average or above it for large lengths of time? So let's take SeaWorld here, for example, ticker symbol SCAS, because this is a good example. It passes both parts of the test and is a great trender. So if we start by looking at the left side of the screen, we can see that price very smoothly fell here when our ribbon was light gray, telling us the price is in the Discovery category and it's likely to trend down. That's exactly what we get. In fact, price doesn't start making a meaningful move up until the ribbon turns to dark gray. And because it fell smoothly in Discovery, perfectly logical to assume when it eventually gets into Endeavour, it's going to rise smoothly. And that's exactly what we get. Also, remember the second part? We want to make sure that for the most part, when price is in discovery, it's staying below its simple moving average, which is here in green. And then when price pops into Endeavour, we want, again, for the most part, for it to stay above that moving average. It's a very simple test to make sure that stocks have the ability to trend. And this guy passes with flying colors. Next, we have a stock Realty Co., ticker symbol O. We can see that when price was in the discovery category, it trended down nicely. And once price moved into Endeavour, it started its upward trend, just like it was supposed to, since that's what the Endeavour category represents, upward trends. You'll also notice that, again, for the most part, price stayed below the 100 period simple moving average when in discovery, and then above it when it was in Endeavour. So this stock passes our two-part test. Make it in a stock that I would actually want to trade, right? One more time. Down in discovery, when the ribbon is light gray, as soon as the ribbon turns to dark gray, price finally starts to break out. And then in fact, it even finds great support on our 100 period simple moving average. This is exactly what we want to see. Identifying when a stock is going to begin an upward trend is that easy. All you have to do is check and see if price is in the Endeavour category. Now, this is the kind of stock that we want to see people jump into. Me personally, if I'm going to put my money in a stock, I want it to be a predictable trending stock. So I don't have to worry about it. I don't have to check my computer screen or be glued to it every second of every day. I can just come back to it at the end of every day because I know I'm looking at a solid trender. All right, okay, moving on. Now, take a look at this chart. This looks wildly different than the last two examples. Just by taking a quick look at this, we can see that this stock is going to fail both parts of the test. First, price is constantly in and out of the Endeavour and Discovery categories, which immediately tells me that price cannot make up its mind. It doesn't know if it wants to rise or fall. And then remember, when the ribbon on the bottom turns to dark gray, that's the Endeavour category. When it turns to light gray, that's the Discovery category. And then second, price is constantly moving above and then back down below the 100 period simple moving average. This is not a predictable stock. This is a good example of the fact that just because a stock enters Endeavour, which price is in right now, doesn't mean that the stock has to rise and trend well. If the stock hasn't moved well in the past, then we don't expect it to move well in the future. However, and this part may surprise you, this is actually ticker symbol SBUX, which is Starbucks. Now, I love Starbucks coffee, and I know that this stock does have the ability to make monster moves, but you literally couldn't pay me to trade this stock because it just doesn't trend well and it is wildly unpredictable. I only want to put my money in a stock that is predictable, and unfortunately, this one just is not. However, here's another example of a stock that is predictable. Walgreens, ticker symbol WBA. Price moves down when it's in discovery, then pops into Endeavour in late January, but not for too long before it then falls back into discovery. A few months later, it pops back into Endeavour and runs up, staying above our moving average. Now, like I said in the beginning, price moving into the Endeavour category doesn't guarantee you an upward trend. It just tells you that it's very likely that price is going to move up. So that begs the question, how do you make sure that you don't jump into this stock in January, but you do get in the stock in September? Well, it's simple. The Endeavour program will also show you when the right time to enter the trade is. And we do this with colored signals. This is the green signal, which shows up as a green arrow on your chart. When you see the green arrow, you can expect price to make a potential long-term upward trend, as long as the signal is confirmed. So how do you confirm a signal? Well, let me just start by reading the definition. Green signals represent price building strength after transitioning from major lows. And that's perfect because these are only going to come up after prices come out of discovery and into Endeavour. So we know that price is low because it's just been trending down while in the discovery category. And price is likely to develop an upward trend that can last from months to years once confirmed, which is great because if I'm a long-term trader, that's what I'm looking for. I'm looking for something safe that I can park my money in and just see it slowly rise week after week, month after month. Now, colored icons mark the confirmation bar and identify the strength of the trend. This is my favorite part about this signal. And actually, this is something new that we've added to our Endeavour program. So when you're looking at a chart, you're primarily looking for two things. Number one, you're looking for a green arrow to appear on the chart. That green arrow is going to alert you to the fact that price now has the setup and the opportunity to make a long-term trend. Then, after your green arrow, you're looking for one of these three icons. The green icon here is going to tell you that that trend has strong strength. The yellow icon is going to tell you that that trend has kind of weak strength. And then the red icon is going to tell you that that trend has no strength, that something has changed between our green arrow telling you, hey, this stock looks good. Now, days later, maybe you get a no strength. That's telling you, nope, something happened. News came out on the company. The technicals changed. This is no longer a viable candidate. So let's dig into these icons just a little bit more. When you see the green 3 icon, that's going to let you know the price has the potential for that long-term upward trend. This guy is going to be your best friend. When you see the yellow 3 icon, it's going to let you know that price is a little rocky and needs extra confirmation. And then we tell you how to confirm that. So in this case, you're going to manually watch for price to have at least 3 consecutive closes above the confirmation bar. And I'll show you how to do all this in just a few seconds. Trust me when I say that it's almost laughable how simple it actually is. And then last but not least, when you see a red 3 icon, it's going to let you know that price has become overextended and a trade is not recommended. Okay, now let's see all of these signals in action. Let's go live inside MetaStock and take a look at the same examples that we just had up and see if we got any green signals on them telling us to jump in some long-term trends. Okay, so now that we're live inside MetaStock, these look pretty much exactly the same as what we saw earlier. I brought up the same stocks. We have SeaWorld, we have Walgreens, we have Realty Co. The only one that I added was Fitbit, one, because it's a good example, two, because I've been seeing a lot of people talking about this stock and I get emails about it almost every single week. So I thought this would be a good time to address really what's going on with it. All right, let's start with SeaWorld since that's the first stock we looked at when we were in PowerPoint. Now, we're going to start putting together here everything that we just talked about. So we've kind of already discussed that we know that this stock fell nicely in Discovery, so it's logical to assume that it's going to rise nicely in Endeavour. But now we want to see if we had a signal telling us it was going to make this long-term upward trend. So to do that, we come up here to our expert advisor. We've been talking about our Endeavour green signal. We hit attach and close. And now we have our green signals. So I'm actually going to zoom in on this guy. Now, all you have to do when these signals come up is scroll over them. In case it's a little hard to see which color it is, when you scroll over, we'll tell you that this is a green long-term trend signal. Now, like I said before, every time you get a green arrow, that needs to be followed up by one of our colored icons. So in this case, it wasn't followed up by a colored icon. And we can actually see that it spent maybe 2 days back in Discovery before popping back into Endeavour. We know that because the ribbon on the bottom turned to light gray, then it turned back to dark gray. And as soon as it did, we get another arrow telling us this is a green signal representing a long-term trend. 1, 2, 3 days later, we get one of our confirmation icons telling us that this trend has strong strength. This is exactly what we're looking for. We know that this stock fell nicely while in discovery, so it's very likely that it's going to rise smoothly. And now we just got a signal telling us that this trend is strong, or the potential trend is strong. So now, like every good investor, our first question is, okay, that's great. We now know that this thing should rise, but what's our risk? For that, since we have the green applied, all we're going to do is come up View, Expert Commentary, and inside the commentary, we have the definition of green that we've just gone over, our 3 potential icons to confirm the signal, and then a little bit more information on the stock. So let's begin up at the top and we'll work our way down. This tells us that the green signal date happened on 1/23. I can come over here and I can verify that, 1/23. Now we know we're looking at the right thing. We can also see that the confirmation signal was a green 3, telling us this has strong strength and price has the potential for a long-term trend. Perfect. It's just what we're looking for. But what about that risk? Well, if we come down here, we have it all spelled out. For long-term trades, use $12.45 as a stop loss and risk estimate. Then we also say that trades with a risk above 16% are not recommended. And we give you our estimated risk from the confirmation bar, which is 15%. Now, 15% is very close to our 16 limit, but it's not there yet. So we're still okay. We also know that on average, in 15 days, this stock's moving $1.11, and 120 days, roughly 6 months, it's moving 87 cents. And we can also verify that the volume on this is pretty good. Now, I'm going to put a line on the chart that represents our $12.45, our risk. 12.45. I can now get rid of my commentary. Now, we know from our signal that price is likely to rise. We know that if price doesn't rise and instead it falls down to here, this is where we're going to sell out. The question now is, if our risk is 15%, what is our potential profit objective, right? Because we're not just going to listen to the fact that this thing should have an upward trend, because that means something different to everyone. Well, what it means to us is we're looking for this, all of our green signals, to make 20% inside of 6 months. Now, sometimes that gets readjusted where we'll say 15 to 20%, but on average, we're looking for 20% profit in a 6-month time frame. So how do we know that this stock is likely to even move up 20%? Well, we have a very simple way to find that out. All we do is we look back in the history of the stock and we make sure that it's done it before, and then we say it's logical to assume it can do it again because of our long-term signal. So if I zoom back in here, on the day this stock was confirmed, I'll take the closing price, so that's $14.65, which means that 20% from $14.65 is going to be roughly $17.60, roughly. Now I'm going to move back in time, and I'm just going to verify that this stock has been there since we're in year 2018, between 2018 and 2017, respectfully. And I can see that in June of 2017, price was at our $17.60. So it's logical to assume that with our long-term signal, it can make it back up there. And now when I scroll back over, we can see that that's exactly what happened. Let's zoom in here. Since price moves so much higher, it gets a little distorted. So we jumped in this trade either on 126 or the next day. The goal is to always jump in these trades as close to this confirmation, this signal, as possible. Within a day or two, though, won't hurt. And I'll say we're in this for February, March, April, May. So 1, 2, 3, 4 months. This day pops up, hits our 20% projection, and you are free to either sell out and take your profit, or in this case, price did move up and make some more money, but I am a big, strong believer in that when you set a profit objective and price hits it, you bail out. At the very bare bones minimum, We always tell people at least sell half because a 20% move in 6 months is pretty good. And this isn't the only stock that did this. We're going to get these stocks every week, every month. They don't stop coming because stocks keep regenerating, right? Like we said before, they're cyclical. So we'll zoom out and we can see that this stock actually went on to have a gorgeous run. But I'm confident when I say that at our 20%, this is the proper place to get out. Now, let's take a look at another one. We talked about Walgreens. So once again, our very first step, once we apply our template, is we want to make sure that this stock moves. If it was in discovery, it falls smoothly. That way we can make the prediction and say, hey, if and when it ever gets into Endeavour, it will rise smoothly. And we can see here that while price is in the discovery category and our ribbon is light gray, we get a pretty decent smooth move. It does push up, but that's only to get back into these Endeavour little pockets here. So this guy's okay. He passes the test. We'll come up. We're going to apply our green expert advisor, attach, and close. And now we get our green signals. So instead of starting over here, let's start on the left side of the chart and we'll move our way over, right? Because this isn't the first green signal that we got. Here we go. We get a green signal here on 9/13 of 2017. But this is not followed up by any of our confirmations, right? There is no green, yellow, or red 3 after this. And price falls. That's fine. We were in no danger of taking this trade. Signal wasn't confirmed. We move over here. 125 of 18, same thing. We get our green signal, but it's never confirmed. And price pushes down into discovery. Again, we were in no danger of taking this trade. Now we're at 821 of 18, green signal, but it's not followed up by any confirmation. Falls into discovery for just a day or two. Let's zoom in here. Then we finally get another signal on 9/11, 1, 2, 3 days later. We're met with a confirmation, but this time it's yellow, telling us this trend has weak strength and extra confirmations needed. Okay, well, how do you do that? Very simple. We're going to come back up here, view, expert commentary. We're going to scroll back down where all of our good information is. And this time we can see our green signal came up on 9/11, which is exactly what this says. The confirmation was yellow, weak strength, and it's going to tell us how to confirm. So extra confirmation recommended. We're going to manually watch for price to have at least 3 closes, to have at least 3 consecutive closes above the confirmations bar's high. Okay, super simple. This is our confirmation bar. I want the high, which is 70.70. I'm going to place a line there. 70.70. And now all I have to do is sit back and wait. Ooh, here's one. So here's 1, 2, 3, which means on 9/20 we are confirmed. And we should now expect this stock to have its long-term upward trend. Took a little bit more days from our confirmation, but that's okay because now this should be perfectly safe to take if we're okay with our risk. So let's check our risk. Long-term trades, use 65.99. Okay. Let's set it 65.99. And that's 6%. Now, this is 6% from our weak strength indicator. It's not 6% from the actual bar that we're going to jump in this on. But because price hasn't fluctuated that much, my guess is that this is still less than 10, which is far from 16, and I'm okay with that. So now I'm done with my commentary. Now it's time to see, okay, if we're making all of our calculations from our confirmation bar, when the close was at 70.28, that means let's see, quick calculation. Our 20% should be 84.35. Let's zoom out. I'm going to place a line here and our 84.35. Oh, that's way up there. There we go. Yeah, okay. Now it's time to look back in the history of the stock and say, hey, has it been there within our rough 2018 through 2017? And we can see that although price got close here, it was actually at that same price in May of 17, which qualifies the stock. I am now confident, given our long-term trend signal, that price will make it up there. And we see price start to move up here slowly but surely and hit our 20%. I also think it's fairly important to remember that this is today's chart. This is 12/13, which means that this stock not only made its 20%, but has held up in October, November, and for all of December. While the markets have been for the vast majority falling, this guy was safe to keep our money in. Why? Because one, we knew it had a long-term trend signal, and two, we knew it was going to be a good trender. All right, let's move on to the next. The next example we had was our Realty Co, ticker symbol O. Same thing, we have already qualified this. We know that the stock falls well in discovery. So it's natural to assume that if it got into Endeavour, it was going to rise well. We'll come here, attach our green. You know what? Let's start with this guy back here. So the first green signal we had on this guy was actually in 2017 on 217. That's followed up a couple days later with our strong strength indicator. But as we can see here, price actually fell. Now, this is a great example of why you don't just take things when they have green long-term trend signals and our strong strength indicator if the stock doesn't have the potential to make 20%. And since this close, 63.14, and price here only got as high as 73, that's not nearly 20%. So we wouldn't even be looking to trade this stock. And price fell, but doesn't mean anything to us. Then, a couple months later, in 2017, again, green long-term trend signal, followed up by our weak strength, extra confirmation needed, and we don't even have to look in the commentary because we know to qualify this, we need to have 3 consecutive closes above the high on this, which is 62.31. And as you can see, that never happens because price falls. So we're in no danger of taking this trade. We'll move forward. We get another green signal, no confirmations at all. Doesn't mean anything to us. In no danger of taking that trade as price continues lower. Now, we come to June on 6/26 of 18. We get our long-term trend signal, perfect, followed up a little ways later by our strong strength indicator. That's exactly what we're looking for. View, expert commentary. Let's check out what our risk is. We're looking for 51.62 is our stop loss. 51.62. And on top of that, our estimated risk then is 6.86%. Perfect. This is a very low risk trade. And again, I'm looking for 20%. So let's see what this close is. The close here is 55.42, which means that our 20% is roughly 66.50. I'm going to again place a line there, 66.50. And let's back up in time and see if this is a logical projection. Now, we can see that price has been up at our 66.50 level, although it hasn't happened for all of 2018 and it hasn't happened for all of 2017. It actually hasn't happened since October of 2016. This is kind of stretching it for me. This has been a very long time that this stock has not been able to get back up to that level. In this case, best case scenario, me personally, I'd take half my shares. I would most likely move on from this. Although I know this is a good trender, I'm really not willing to take that risk. But if you know the company, if you really think that the stock has the potential to move up, then you were given a strong strength indicator. And this stock does have a fairly high probability of success. So If we move back in here, we can see the price does just that. It moves up. It does eventually take a pullback in September and October, but it bounces perfectly off our 100 simple as it continues higher. And once again, this is today's bar, which means during October, let me zoom in here so we can see October a little bit more. During October, November, and December, while the markets have been fluctuating and arguably falling, this stock was making a nice, smooth move up. Exactly what we would have anticipated, with the market falling even. All right, let's take a look at our final example, Fitbit. Since we didn't look at this in our PowerPoint example, I'm gonna zoom out and we'll do this one from scratch. So it doesn't take long to see on this. Although this stock does smoothly move down and then consolidate while it's in discovery, it is very rarely ever in Endeavour. So that right off the bat, big red flag. Also, since this stock IPO'd, it's been in discovery. Also a very big red flag. But like I said earlier, I get emails on this stock almost every single week with people always asking if it's finally time for the price to move up because they believe in what the company's doing. And you know what? So do I. I think they make it a fantastic product. I just don't want to trade their stock. So let's go through the process. We want to know if this had green. Okay. Close. We do get a green signal here. I'll back up just so you can see. There was never any green signals while we're in discovery, right? The signals only come up while we're in Endeavour. We have one green signal that came up here on 12/13 of 17, but no confirmation, falls back into discovery. Then in 2018, let me zoom in a little more here. We finally get our green signal on 6/7. A couple days later, we're given our confirmation. However, it's red, telling us no strength, not recommended. Now, since we haven't seen this one before, let's go view expert commentary and see what it has to say. We'll scroll down. No strength. Price has become overextended and a trade is not recommended. All right, now this is regardless of what our risk is. If you get one of these, we never, ever recommend taking this trade. It means the price is just pushed up too far, too fast. It's incredibly likely to pull back down, and that's exactly what we get. And then on top of that, we can see here that our estimated risk is 33%. We would only be looking for a potential 20% profit. There is no way you could take this trade, regardless of what colored icon comes up here. But since this guy has no strength anyways, we know we can look elsewhere. We don't have to spend even a second more analyzing this stock. We know that it is not going anywhere. And since we had that symbol, it has fallen back into discovery and it's practically stayed there the entire time, except for this little stint it's spent in Endeavour, and even that, no signal. Okay, I'll get rid of these. We'll move right on. Now, what I don't expect is I don't expect everyone here to bring up random stocks and hope and pray that they have the right day on the right stock where there's a green signal. Unfortunately, with MetaStock, you don't even have to worry about it. MetaStock has explorers. Inside these explorers, you get to run reports looking for very specific signals. So for instance, we can come here and we can see our Endeavour green confirmed. This means that we can run a report on any size list of securities that we want. So let's say you want to run a list on all the 4,000 NASDAQ stocks. All you have to do is come down here. No, I'm sorry, there's 3,107 NASDAQ stocks. But let's say you want to run all the stocks on the NYSE, all 4,677 of them. And you want to see if any of those stocks have confirmed green signals. Then all you do is you check mark both of these and you'd run the report. You even get to choose whatever day you want to run that report on. So you can go back in time as far as the stock has been publicly traded. Now, I've already run a report just to save some time. I backdated this. I went back to 6/18 so that any stocks we bring up, we don't have to wait to see if they either made money or lost money. We can immediately see on the chart. So what we give you here is the names of the securities. We give you the closing price, the high of the closing day, and then green, yellow, or red. These represent our confirmations. Is it green, strong strength, yellow, weak strength, red, no strength? So I'm going to qualify these for only greens. That's all I'm interested in trading, right? I don't want to take the risk of a yellow, and I'm staying as far away from red as humanly possible. So this means that I'm left with SYNA and EPR. I know that because there's a number 1 in those green columns. So let's open up both of those charts. And this is what a normal chart looks like without our Endeavour and Discovery ribbon. Not a whole lot of information, so I'm going to go ahead and apply the ribbon. I have it saved down here as a template, EPR, and now SYNA. This way, we can see more information. Get rid of the blank charts, and we're left with just the good stuff. All right? Let's start with EPR. Okay, let's back up here. Our first question is the stock a good trender? Resounding yes, right? We can see here that when it falls into Discovery, it's got this very smooth movement. It also stays well below our simple moving average. And then when it gets into Endeavour, it stays above that moving average. Now, it obviously does slice through over here, but look, we were getting pockets of Endeavour. So of course, price is going to try to move up. Same thing with here, pocket of Endeavour, price was trying to move up. The question is, did any of these pockets of Endeavour give us a green long-term trend signal? So green, attach, close. Let's take a look. So it looks like we actually did get a couple signals back here in 2017. So let's do our analysis here. Let me zoom in just a little bit more so I can get the price. Zoom in just a touch more. Okay, our closing price here, where we have green, strong strength, perfect. Let's check our close, 76.63, all right. So before I do any more work, I wanna make sure that there is 20% potential in this stock, which there is not. Price doesn't even make it up to 86, which is nowhere close to 20%. So we keep moving on. We can ignore that signal. Here we get a green arrow, no confirmation. We get to ignore that. Price falls, but doesn't mean anything to us. We weren't in it. Now, finally, we get to 2018. On 6/13 of 18, we get our green long-term trend signal, followed by our favorite green strong strength. Things are looking good here. View, expert commentary. Let's check our risk. Scroll down. 56.83, which is 12.34%. All right, I'm okay with that. There we go. Let's place our line, 56.83. We're done with this guy. Now the question is, what is 20% from our close, which is 64.83? That would be 77.80, give or take. Let's place our line at 77.80. Okay, now let's go find that line. We'll zoom out and hopefully prices hit it. Oh, looks like we come close here. Not high enough. The high of these bars only come to 77.70, 10 cents away. Looks like we don't actually hit that price until September of 16, looking backwards. So again, this is, for me, this is just outside my range. I just can't get my head around taking this trade. It's been years since it's been back up at that price. It would take something astonishing to get this thing back up there. But let's just say, for sake of argument, that that was okay for you. Let's see how it would have turned out. We'll zoom back in. We know that we said it was okay to take the trade here. So we are now, that's June. So it's 1, 2, 3, October's in there, 4, 5, 6. December makes 6 months with this guy. And price is at 69.75. So we can see that this is our 20% projection. Remember, it's not a guarantee, our projection. And here, price didn't even make 15%. So 69.75 from our close. That's probably 7.5%. So not horrible, but remember, we're in this for July, August, September, October, November, most of June too. It's a good 6 months for 7.5%. Again, not horrible, This stock obviously stayed positive if you were to have gone long EPR, again, with the markets in their turmoil, with the markets moving up and down every day, primarily down, you're still up money, right? You're still up 7.5%, but it's taken 6 months. So if I was long this stock, I would most likely sell out. I'm going to take my money and I want to put it in a fresh trade, something that does have the potential to make 20%. So this is actually turns out to be a great example because remember, the price projection was really far back there. Very unlikely that you actually hit that. If you were to have taken this trade, again, I would have to suggest that it'd be half shares because although our risk wasn't large, it's just not that likely the price rockets up in our short time frame to hit that projection. Now, if I want to give this stock a year, yeah, it could probably make it up there. But I'm looking for my 15 to 20% in 6 months. Get in, get out. But this wasn't our only trade that day, right? We're looking at 2 stocks. So let's check out SYNA. Let's go back in time. Okay, so right off the bat, we're going to see if this guy passes our 2-part test. Is it a good trender? And this is a resounding no. This doesn't even take long to analyze. We can see here that we are constantly in and out of Endeavour and Discovery. Primarily, we're in Discovery, which means that this stock does not move up, barely ever. It can't even get into the Endeavour category. And if and when it ever does, we're just slicing through this moving average. There is no indicator or symbol in the world that I could possibly see where I would want to trade this stock. It has no trend. My money will not be safe in this stock. It is not predictable. So that's literally how long it takes to do the analysis on these stocks. I knew that I need to stay away from SYNA. And if I wanted to, I can put my money in EPR, although this guy only gave us 7.5% in 6 months. Again, keep in mind that we knew from the beginning that our price projection was a little out of reach on this guy. I'm going to close both of these. And the last green stock that I want to bring up here, I'll show you one real quick. We're going to look at a stock that I'm actually in right now, SCG. And once again, this is the blank chart. I'll apply our template. Once the template's up, I'm going to apply our signal. Let's move back. So we can see here that this guy trends down nicely in Discovery. So I had every right to assume that once it pops into Endeavour, which it did, it would have the ability to trend up, which it has started to. Right here, I have strong strength. I actually got in then the next day, and I've been writing this up. Now, something happened a little bit different on this guy because what I think is interesting here is before we were looking at examples that primarily came up in the beginning of 2018, we had our green confirmation with strong strength here on 11/19 in November. Now remember, with the markets falling October, November, December, this guy still came up in the report. He came up in the same report that I just showed everybody. He came up in between my 3 favorite reports, NASDAQ, NYSE, NYSE, and Amex. And then in addition to that, I have a custom list that I run with just over 1,000 stocks that I actively watch. So all I had to do was say, okay, this guy had strong strength, very interested in trading this. I checked my risk, view, expert commentary, scroll down. My risk was 15.60%, kind of steep, but again, it's lower than 16. And my price projection on here, I know that I can absolutely make 20%. Now, what I did on this though, is as soon as I was up 10%, I actually sold out. I sold half my shares on 12/4 because I was in this trade I got in here on 11/20. So we'll call that 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading days, right? We're excluding weekends. 10 days, I made 10%. I had to take at least half my money. That was a very quick move up. This way, now I'm technically hedging my bet. Price can fall, price can come all the way back down. I don't even have to wait for it to come all the way down to my stop loss. If I wanted, I can sell the rest here. I'm at roughly the same price that I sold it at. Or I can continue hoping that this stock rises during the holiday season. All right, I'm not positive how I'm doing on time here. Fortunately, I think I spent a little bit longer on these greens than I scheduled to. And I want to show you guys, let's go back into PowerPoint. So what we talked about originally, remember, was that our game plan for today was to go over three things. One, if a stock has the ability to trend up or down. We did that with Endeavour and Discovery. Two, how to tell when a stock's about to make 20%, even in a bad market. We just did that with our green signal. So last but not least, we have the early warning. So I might go over on time here. Jeff can stop me if it gets real bad. But I'd like to show everybody the early warning signal. And I'll do it fairly quickly.
Yeah, that's fine, Ryan.
It's okay? All right, great. So just like I did before, let's start just by simply reading the definition. Early warning signals are going to predict potential price dips of 5% or more. And we give this one a time frame in approximately 15 days, with a minimum dip of 2%. Price will only move down though, once our trigger point has been crossed. If the TP, which stands for trigger point, is not crossed, price should continue its original upward trend. So what does this mean? Well, this is actually a very simple yet interesting setup. What you're going to get here is when you're looking at your chart, you're going to get two or more red bars on the chart that are telling you that price is getting extremely overextended and that a dip in price is very near. That's what the red bars mean. Then you're going to see our diamond that's going to appear above price. That's the early warning signal. So when we check the commentary, we can get our trigger point. And then if price crosses that trigger point, we should see price fall 5% or more in about 15 days. So instead of looking at here in PowerPoint, let's just jump back in MetaStock for some live examples. Let's get rid of the stocks we had up. Close. No. All right. Now, with the markets falling day after day, it only makes sense that we want to short some stocks, right? We actually want to profit from that market coming down. And that's where the early warning signal comes in. So when we scroll over our scan, because I don't want to look for these stocks manually, it tells me that the early warning signal is going to predict 5% price dips. This exploration scans for early warning signals, which identify when price has the potential to dip 5% or more in approximately 15 days. Perfect. Now, just like I did before, I've already ran this report. I backdated this time to November 20th. And for this, I ran the report that I talked about earlier, NYSE 4,677 stocks. This took 5 minutes to run. I hit the run button, I walked away, I came back, and now I have a list of stocks to potentially trade. So let's open up both of these charts, and I'll walk you through how to tell if these stocks are going to fall 5% or more in roughly 15 days. So just like before, here's a blank chart. Doesn't really give me a lot of information. So I'm going to bring up our Endeavour and Discovery template. On both of these guys. Let's get rid of the blank charts. Okay, so we know that both of these stocks are in Endeavour. But what we're interested in here is our early warning. So this time we're going to come back in our expert advisor. We're going to go smart get out EW, attach, close. Same thing with Tootsie Roll. Expert advisor, we're looking for number 7, smart get out EW, attach, and close. All right, let's start with ticker symbol CALX. Now, like I said before, what we can see here is our early warning signal always starts with these red bars. As soon as the bars turn red on a stock, that's telling us that price has moved up way too fast, and it's very likely to eventually come down 5% or more. Every time one of these bars comes up red, that's how we know we can start paying attention to it. Or you can save time by just simply running the early warning report like we did. So when I scroll over our early warning icon, it's telling me that this stock has a potential for a 5% dip. So just like before, I'm going to come up here, view expert commentary. I'm going to scroll down to the meat of it. Our early warning signal came up on 11/20. Just verify that we're looking at the right date. Yep, 11/20. Now it's time we have a trigger point. Our early warning signals need to be manually confirmed. So we're going to mark 10:09 on the chart. 10:09. I'll make this red. Say OK. All right, come back in here. And now we give you the projection. We said that these are likely to fall between 5% or more with a minimum drop of 2%. So if we want to mark our 5% projection is $9.59 on the chart, of course. 9.59. Say OK. Now our symbol, our early warning said potential 5% dip. If price crosses our trigger point, which is 10:09, if it does, we know that we can expect price to drop down 5% from that trigger point, which would bring price down to 9.59, giving us 5% profit if you shorted the stock. So we can see on November 21st, we cross our trigger point. That's confirming the signal. You can now go short. So we're in this trade 1, 2, 3, 4, 5, 6, 7 days, obviously excluding any weekends. 7 trading days, price pushed down 5%. We can now comfortably take our money and run. Let's check the TR. We're going to do the same process. Come up here, early warning, potential 5% dip, view, expert commentary. We're going to skip the definition. We're going to scroll down. Our trigger point is 35.24. 35.24. Again, I'll make that trigger point color red just so it stands out. Okay. Perfect. I also want to mark my 5% projection, which in this case, since the trigger point is 35.24, 5% down gives us 33.48. 33.48. Okay. And there we go. We knew that on 11/28, if price crossed our trigger point of 35.24, it was very likely to fall 5% or more from there. So 2 days later, we can see price cross the trigger point. So we'll call this day 1, 2, 3, 4. This looks like it may have nicked it. We're not going to count that though. 5, 6. Takes 6 days for this stock to drop 5%. And this is actually a fairly good example because we are by no means saying that just because the stock had an early warning, that this thing is going to fall 10% or 15% or 20%. These early warning signals just predict these dips in price. That's why we call them dips in price. We don't know if they're going to continue to fall or if they're going to rebound back. But we do know we can get 5% plus from them. And when I say plus, I don't always mean to hang on to this stock for multiple days. Like this. This stock crossed our 5% line, but then continued down during the day. So you don't always have to sell out at just 5%. When these things start to move down, they really pick up steam, and you can very often get more than 5% just on the day you actually cross that figure. This actually brings me to a very good point here. Now, I went through the early warning signal very quick because I'm a little worried that we've been here for over an hour. People might have some places to go. So if you want more information on the early warning signal and you already have the Endeavour add-on, if you scroll down in the commentary and you click tutorials, you're going to immediately go to our Simplicity website where we have lists of tutorials on how all the signals work. So if you want to see a tutorial on every signal, you can watch the Endeavour, or you can scroll down here and you can get short 5-minute videos along with longer 15-minute videos on every single signal that we offer, including the early warning signal. Also, if you're interested, we have our free quick picks, which is where we send you weekly, I can show you, we send you weekly quick picks on directional trades. So right now, since the market's falling, we've been sending a lot of emails for early warning signals, where in the morning before the market opens, you'll receive an email. It's going to show you an example of a trade. Here's a more recent one that we had. On 11/5, we sent out an email telling people that there was an early warning signal on ticker symbol JE, predicting a 5% or more dip in approximately 15 days once the trigger point was crossed. Now we can look at our chart here and see there's our early warning signal. This was our trigger point, and price fell. Now, this is kind of an extreme example, but just happened. This was yesterday's movement. So if you took a short position when price crossed our trigger point on 12/6, you actually made 16.46% in 5 days. This was a good example of a stock that you couldn't help but make more money on. It opened and just immediately tanked. It blew past our 5% projection. By the time I could turn on my computer and log into my trading account, the stock was already down 10%. So sometimes you're going to make more than 5% on. Now, if you want to sign up for quick picks or different alerts that we have, and you don't already have the Endeavour add-on, all you have to do is you can go to what'ssimplicity.com, and it's going to bring you right to our website. Where you can either go to the tutorials page where we just were, or you can scroll down to the bottom of any page and sign up for those same quick picks. All right. So that finishes up my quick talk on the early warning signal. So we'll go back in a PowerPoint here and we'll finish it up with the question that's probably on everyone's mind. All right, that's great that the system does all these things, but what's it going to cost? And here's where I always say, surprisingly, not that much. The Endeavour add-on is actually offered as a subscription service through MetaStock. So it's only $99 a month. And then in addition, right now, we have a special. So if you buy 1 month, you're going to get another month for free. So you get 2 months for only $99. And based off the examples we just looked, it's not too hard to make back your $99 considering that we have short trades coming up constantly with our early warning. They're going to make you that 5%. In addition, you have the longer term trades that you can make 20% on. And then, since I had to go through a lot of this presentation fairly quickly, we always say, if you have any questions, please don't be shy. Just shoot us an email at about@simplicitytradingsystems.com. And then I will personally get back to you within about a day if it's on a weekend. Also, if you wanted to sign up for our free quick picks, all you have to do is go to what'ssimplicity.com, and you can scroll down to the bottom of any page and just type in your email address. Okay, that about wraps it up. I think now I will turn it back over to Jeff and see if anyone has any questions.
Yeah. Okay, I don't see any questions coming in, but thanks, Ryan. That was one of the more detailed explanations. I loved all of the examples, all that kind of stuff. Thanks for coming in and sharing it with us today.
Oh, absolutely. Anytime. I think we have these scheduled for next year where we're going to do about 1 webinar a quarter.
Yep. Mm-hmm. So great. All right. Thanks for everybody that came tonight, and we'll see you at the next one.